Hi, everyone. Welcome back to the Future of Finance podcast. I'm your host, Marissa Wood with Union Financial Services. And today I'm joined with my business partner, Lisa Green. Welcome back, Lisa.
Thank you very much. As always, it's great to be here.
Our episode today is all about financial tips for the self-employed individual. So if you're self-employed or you're thinking about becoming an entrepreneur and going out on your own, this episode is for you. So thanks, Lisa, for coming.
Sure. I think you invited me because I have been self-employed for most of my life.
Yeah, pretty much your whole life, right?
Yes. It's been challenging at times. It's been very hard. And then it's been very rewarding. I'm so fortunate to have been successful most of my life with being self-employed.
Mm-hmm.
There are some things that we have to talk about, though.
Yeah, I mean, in theory, it sounds great being self-employed. You have the flexibility, the freedom, sky's the limit on what you can earn, but it comes with its set of challenges. And one of the main challenges that we've seen, and one of the reasons we wanted to have this episode today, is that 40% of self-employed individuals in America have nothing saved for retirement.
Now, that's amazing.
40%, that number is staggering.
It is, and that's actually very sad. Because you need to know, being self-employed, you have to do this on your own. Mm-hmm. You have to work with a financial advisor. You have to work with great accountants. You have to be able to provide for your retirement. This is not just, I'm making great money during my career, and then all of a sudden, 5 years away from retirement, start to think about it.
Yeah. I think probably why that happens is because anyone that works for a big company has the 401k plan and they're automatically enrolled. It's automatically deducted from their paycheck. It's kind of a no-brainer to just have it set and forget. Whereas if you don't have that, you have to take a couple extra steps. And I think most people don't even know where to start.
So let's talk about those steps.
Yeah.
For the self-employed person, maybe it's a small company, maybe it's 2 employees, 10 employees, 20, 25 employees. But at that point, let's talk about what's available for the small company, whether it is a 401k plan, SEP, simple plan. There are so many different options for them, and that's what we do. We set up many different businesses on their retirement plan for their employees. So let's walk through those steps.
Yeah. So, I mean, for the self-employed individual, they might want to look at a SEP IRA plan, which the whole appeal to a SEP is that you can defer a good portion of your income. So it reduces your taxable liability. I think, right now, the maximum that you can defer is up to 25% of your taxable income from self-employment into that SEP IRA up to a limit. And so not only are you reducing your taxes, but you are saving for your future, and you can do it yourself with the help of an advisor. So that's the SEP IRA. I know me and you both take advantage of that.
We do. And once again, working with an accountant that helps us along the way tells us this is the max that you can contribute to your SEP this year. This is, what you need to do in order to save on taxes. So we're building our own retirement plan as individual employers. We're a small company.
Yeah.
So we need to have our retirement plan set. Now, the simple plan is a great plan for maybe, anywhere from 5 to 30 employees. And how that works, it works just like a 401k, but it's simplified.
Yeah.
Okay, so there's not the reporting with a 401k. There's 401ks are a little bit expensive because you need to have a third-party administrator. I know you work on many, many simple plans for a lot of different companies, and you make it easy. You make it simple. You make it seamless. So you work with sometimes the payroll department. Sometimes if it's a smaller company, there's just a few people and the owner may be the person that's in charge of that. And so how do you do that to make it work like the 401k, but it's the simple plan?
So the simple plan, yeah, it truly does work just like a 401k. The employees can have payroll deducted contributions, and then the employer, the company, can match up to a certain percentage. And so the employer is getting the tax benefit as well as the employee, and it's helping them both save and have a plan set up. The only difference, like you said, is less reporting, so you don't need that third-party administrator. And the limits that you can contribute each year are a little bit less than the 401k, but they're still relatively high compared to just a traditional IRA.
Right.
And so the way we set them up is, yeah, I'll work directly with either the business owner, their bookkeeper, their payroll department, and we enroll each employee as their own individual client. That's important too, because each employee gets to feel like this is their own plan. They're not just one number in a large company. We know their name. As a small business, we treat each small business employee as an important client. That's the way we run our business, and I think why we're very successful.
Yes.
And so the simple plans are great. Like you said, for any companies between maybe 5 and 30 employees, that seems to be the sweet spot. And we just have a conversation with the business owner. How much do you want to match each year? Who do you want to offer this to?
They can change that annually, correct?
Oh, yeah. Yeah, maybe they start out at 2%, and after a couple of years, they increase it to 3%. Kind of as an incentive for the employees to get involved.
So the point is with the simple plan, it works just like the 401k. And, we see people that come in to us and they've worked their whole lives and maybe they're a few years out from retirement, maybe they are retired. But a lot of people, the majority, if not all, of their investment is in that 401k. That retirement investment is all in the 401k. So we know the ease that people have with contributing to that 401k plan. The same thing can be said for the simple plan.
Yeah, absolutely.
And business owners need to take advantage of it, need to investigate it. And once again, working with a financial advisor and an accountant and the bookkeeper in the company, everybody works together and it creates a retirement plan for those employees. It's great.
Yeah. Now, for our business owners that maybe they're solopreneurs and it's just them in the company, we can talk about the SEP IRA again, or maybe an individual 401k if they really want to maximize contributions. Because the cool thing with the individual 401k, you can contribute as the employer and the employee. So you really get a lot of tax benefits there. I know a few of our high wage earners, such as realtors, attorneys, they like taking advantage of that individual 401k because they want to be able to put aside the maximum possible every year for their future and bring down their taxable income.
Right. So the point is with small businesses, there are many, many options for retirement plans. And you have to start, saying that statistic of 40% don't have a retirement plan, that's not going to work out. That is going to implode your entire career of being that self-employed individual and being so proud of that business that you probably have grown. But if you don't have the complete business, and part of that is a retirement plan. And also, for small businesses, in order to retain employees, you need to be able to offer benefits. And so think about that.
That's true.
Yeah, it's very important to have something, some incentive. Well, if a person can go to ABC company and it's a large company and they have that 401k plan, they may choose that company as opposed to a smaller company that has the same thing to offer, but maybe they didn't take advantage of it. Maybe that employer needs to look into things a little bit better.
Yeah, it's well worth it. And whatever that match is that you're contributing as an employer, you're getting the tax savings anyways, and you're retaining valuable employees, not having to rehire and retrain. So it's well worth it.
Right.
Now talk to me a little bit about Another option that business owners have with the Roth IRA, and maybe if they employ their children and taking advantage of that plan.
That's a clever. We found this to be pretty interesting. We have several small businesses that, they want to do something for their children. Whether their children are teenagers or even preteen. So, for example, we have one company that is a cleaning business. They clean office buildings, and they have teenage kids. And so the business owners have opened up Roths for their children and hire their kids as helpers. They pay them a little salary, but at that point, they're able to contribute to the Roth for their kids, even if the kids are 10 years old. They don't have to wait until they're 18. But having that LLC, having that company, and having some sort of a plan inside the company, they can start saving for their children's retirement tax-free. And it's a great option. So there are a lot of different advantages to being self-employed, to utilizing all the things, whether it's tax-free now or tax-free later. There's a lot of different things that we have at our fingertips. But once again, going it alone is a little bit difficult.
Yeah. I think, part of having an advisor is really just having someone to hold you accountable.
Right.
To meet those contributions every year and to stay on the course, because oftentimes if we don't have someone, especially as business owners, we're in charge of everything. Right. We need a couple people holding us accountable and checking in on us to making sure that we're staying the course of our plan.
So true.
It's helpful.
Because a big part of being self-employed is discipline, let's face it. You need to be able to be disciplined and motivated. Now, if you have that advisor in your ear saying, we have to make that contribution to your retirement plan, let's set this up, let's do this monthly. It's very important, because then you're not all out on your own.
Exactly. Now, for anyone that's watching and you are self-employed, or you're thinking of starting a business, or you have a business and you don't have any of these retirement plans set up, let's have a conversation. Like we said, those are just a couple of the options. We've really only scratched the surface of that, but we can dive deeper, and it doesn't ever cost anything to have a conversation with us about that.
Yes, and even if you're not self-employed, say if you're a 1099 commission
Good point.
person, once again, you need to start planning for that retirement. There's plenty of people that are just 1099, work on commission, and are going it on their own and don't know what they can do, especially with 1099 with tax savings. You need to really take advantage of that. So
Good point.
I like that.
Yeah. Now talk to me about, I know this has been one of the downsides of being self-employed over the years, and that is health insurance. We know health insurance plans are expensive for individuals. How has that been with your experience?
That has been the biggest expense throughout my career. Health insurance is very, very expensive, and then most small businesses have a plan that has very high deductibles. So it has been truly a hurdle, and it's a big cost of. So once again, with being self-employed, for those people that are maybe thinking about it, because I know that a lot of Gen Z, they want to be their own boss. There are a lot of variables to take into consideration. Health insurance is a huge expense. Now, once again, work with a professional. There are many healthcare professionals that can set you up possibly with a group plan with other small businesses and maybe get you that premium that's not as high, or maybe a lower deductible, because that has been it's always an issue with healthcare. When we have election years, the politicians are always talking about how to fix the healthcare issue. Sometimes they have made some good corrections. Now, the one thing that I would like to mention for those people that are going to be they're on their way to collecting being part of Medicare. They're going to be 65 in a few years, and you start to get all these postcards in the mail starting at 62. Now, the very interesting thing about how Medicare is based, there's a program called IRMA. IRMA is Income-Related Monthly Adjustment. Now, you're going to say, what is that? Well, interestingly enough, when you're 63, that is what your Medicare payments are based upon, your income for 63. If you make over a certain amount, there is a surplus amount added to your Medicare monthly bill that you may not be aware of. There's so many people that I know of that are self-employed, and that year of income at age 63 is so, so important because if you are self-employed, maybe you can adjust your income down a little bit and maybe defer some to the following year so that when you do apply for Medicare at 65, your age 63 income is not going to put you over that limit. Once again, there are healthcare professionals. A lot of them specialize in Medicare.
So to get this right, we always, we have to pay something for Medicare. I think right now, what is it, 180 or so a month. Now, if your income at age 63 is above the threshold of IRMA, maybe instead of paying that 185 a month at Medicare age, now you're paying 250 or 300 a month. Is that correct?
Yes. You could pay up to $600 a month.
Wow.
Where people are just, they can't wait to get on Medicare, and then all of a sudden they say, well, it's not any cheaper than my private insurance. What happened here? And it's an interesting thing that a lot of 63-year-olds don't know. Now, a lot of 63-year-olds that are working for a company, and if they're making a lot of money, there's nothing really that they can do about adjusting that salary. Maybe there is, maybe there isn't. But as a self-employed individual,
we can be smart about it that year.
You can, yes. Like I said, maybe defer some payments until the following year.
Max out your 401k that year.
There's the best. That's the best strategy.
Yeah.
Yeah. So keep it in mind.
That's a great tip that I'm sure majority of our listeners have no idea about.
No.
And the government probably doesn't want us to know that either.
Say if you have a property that you want to sell, maybe don't sell it when you're 63.
Really?
Maybe hold on to it for another year, or do it when you're 62.
Yeah.
There are different avenues that you can try that can hopefully keep you under that threshold, because that added premium to your Medicare bill can last for many years. Now, of course, you can reapply and get it readjusted, but it's never easy.
Step. Yeah. That's a great point. And staying on that topic of health insurance, now, of course, we're not health insurance professionals. We work with a couple independent health insurance agents, and that's usually the route we recommend people go. But there are accounts called health savings accounts, HSAs, that if you do have a high deductible plan, you might want to look into opening an HSA to help you cover those deductibles in the future. And the great thing about an HSA, they're one of the few accounts that have triple tax advantages, meaning what you contribute to them is tax deductible to you. It grows tax deferred. And then if you use it for qualified medical expenses, it comes out tax free.
That's amazing. That's a very good tip for an employee, an employer that can utilize that HSA.
Yeah.
Triple tax deduction.
They're a good route to combine with a high deductible plan if that's the health insurance plan that you have in place. So something to look into.
That's great.
One more thing about taxes, and we're not tax professionals either. Of course, we cannot give true tax advice, but prepare for your taxes. Pay quarterly estimates. I think you have to, don't you?
You have to, or else you do get penalized. If you don't keep up with those quarterly estimates, the government wants, as a self-employed person, you're not having all of those taxes. Most people are not having all of those taxes taken out of their biweekly paycheck. So if you do, and for a 1099 person, so you must make those payments quarterly, and they must be fair and legitimate. You can't just say, I'm just going to pay $1,000 in the first quarter. It has to make sense with what you are making that year. Now, a lot of people that are self-employed, they have maybe not a pinpoint number on what they're going to make that year, but you have to be realistic and either base it on the previous year's income or your speculated reach for that income for that year. So you need to make those quarterly payments. And once again, you have to be disciplined. Okay. If you make $10,000, that $10,000 doesn't go in your pocket. It has to, part of that has to go towards taxes. And once again, the taxes pay towards Social Security. They pay towards all of your benefits that you're going to get, the Medicare. So you have to pay in order to have those benefits later in life.
I know it hurts writing out those estimated payments. None of us want to do it. And another misconception is that each payment has to be the same, and that's not true. No. You just said a lot of us don't know exactly what we're going to be making for the year when we're self-employed, but maybe by midway through the year, we know that it's a banner year.
Yes.
And so that third estimated payment, we have to increase it.
You do.
As much as we don't want to,
right.
We have to.
And if by the end of the year, say if in that fourth quarter, nothing, you just don't have a great fourth quarter.
Yeah.
Well, you still need to make that estimated tax payment. And if it needs to carry over to the next year, that's a possibility. Once again, as self-employed people, you need to work with a good accountant and a good financial advisor. And we've also added the healthcare advisor on that family of need.
The other thing that is a bit of a challenge as being self-employed, and I've seen it myself, we've seen it with clients, is you have to prepare for the unexpected with both your income and life itself. We always talk to everyone about having an emergency fund with about 6 months worth of living expenses. But once you're a business owner, you need to have an emergency fund for your business as well, with at least 3 months worth of business expenses. And that should be separate from your household.
That needs to be kept separate.
Yeah. Tell me a little bit more, too, about some of the unexpected things we need to plan for.
So we all remember COVID. Self-employed people were in a very bad way. There was no income coming in. The government tried to pick it up along the way, but you have to have at least 3 months of a safety net separate from your personal. So once again, self-employment is great. You have freedom, but boy, do you have a lot of responsibility. And if you don't do it right from the beginning, you're going to fail. There's a statistic that is not a pleasant statistic for startup businesses, for entrepreneurs.
Most don't make it past 5 years.
They don't. And it's because of lack of planning. Of course, it could be from lack of income, but if you do the planning correct, that income should follow. We have a lot of resources at our fingertips. Young people, you have AI now that's probably going to calculate if you're going to be successful in whatever career you're looking at. There are a lot of different resources that are out there that hopefully can give you a little boost along the way. But planning is key.
Yeah, and plan for the catastrophic events that you don't want to happen and that you don't even want to think about. Have a plan in place so that you don't have to think about them.
Such as disability insurance.
Exactly.
Right? Say if you're self-employed and you fall off a ladder, cleaning, there's things that need to be put in place That's another insurance. I mean, disability insurance, that's another bill.
Mhm.
But that can help you get past that catastrophic event.
Mhm.
So something to think about as well. Now, if you work at a desk, maybe it's a little bit different than if you work, in construction or with your hands, and if you get injured, you'll have no income.
Yeah.
Things to think about, things once again to confer with a professional.
Mhm.
You've got to talk about insurances. You've got to talk about the what ifs.
Mhm.
So
Yeah, something I even learned about recently is called an indemnity policy. And it's kind of like a disability policy. I think you can combine them, but indemnity means it pays you. It doesn't just reimburse you for expenses. So say if you go into the hospital and have a surgery, or you go into the hospital and have a baby, C-section, regular delivery, whatever it may be, each type of ailment or event that happens has a certain payout to the client. And so you're really receiving money for going into the hospital. And this is separate from your health insurance. And that can be the difference maker in keeping your business expenses paid.
yes,
I mean, especially self-employed, we don't get maternity leave.
right.
So maybe getting creative with an indemnity policy, some type of alternative disability policy, can help you get through those
That's a good
lower income
information.
years.
Yeah, that's good information. So once again, making that $10,000 doesn't go into your pocket. There are a lot of expenses that must come out. But if you plan for that, and if you have guidance in that, you can be successful.
Yeah, I mean, living below your means is key. We don't want to spend every dime we have. And as entrepreneurs, the income can just increase and increase and increase if we're doing it right. But let's not have our expenses and lifestyle just keep increasing, increasing, increasing. Because, man, we know it happens.
That happens. That happens next time you see that person driving that great sports car or buying a boat.
Yeah.
Yeah, back that down a little bit.
Yeah, exactly.
We know you want to spoil yourself, but be realistic.
Yeah, hit all these other goals as well.
Right. That's probably, it's human nature to want to spoil yourself after you've worked so hard. A lot of self-employed people work 6-7 days a week. There's not that time off. There's not that free weekend. So the tendency to spoil yourself is there. But understand that, moderation is very important, and that'll suit you in the long run.
Yeah. Now, the last thing I do want to just bring up and really just scratch the surface on is the idea of having a pension. And I think a lot of people take certain jobs because of the pension, federal, state employees. It's appealing, that idea of they're going to pay me as long as I live, and I know I'll never run out of money in retirement. I think a lot of people take positions for that.
I agree.
And unfortunately, the self-employed individual doesn't really have that luxury, so they think.
We can make a self-employed individual a pension. We can get that pension in place, and it will work almost exactly like the pension, where it's going to pay you for life. The one difference is when you do pass away, that death benefit can be left to your heirs.
In a lump sum of
In a
cash.
lump sum. That's what's different from the pension. The pension, it depends on if you take a single or a joint pension, but there's never a lump sum left over. We have an investment that will literally create a pension for an individual, for a joint husband and wife or spouse. There's so many different types of investments that work just like a pension. That it's very exciting. When we meet people and they say, I have a pension, they're so thrilled. And they should be, because it's a great retirement tool. Well, the insurance industry and the investment world has decided that we can offer that individual a pension-like retirement that you cannot outlive. And there will be a death benefit for your heirs. How
Yeah.
nice is that?
It is. It's great. There's a lot of different investment vehicles that can provide this type of plan. So if you're within, I would say the sweet spot is about 10 years of retirement, we can start looking at investment options to create your own pension.
It's exciting.
Yeah. Yeah.
Yeah. I'm glad we're
We could
ending
do
it
a
on.
whole- we
I'm
could do
glad
a whole
we're ending
episode
it
on
on the
that.
pension
Yeah.
because it is truly a gift for those self-employed people that they can even offer to their employees through an advisor.
Yeah.
Okay, so we have that simple plan set in place, but maybe you can help that person with a pension for down the road. It's amazing.
Yeah, and roll that simple IRA right into something that will provide them with income.
That's great.
Yeah. Now, one last question. Because you've been self-employed nearly your entire life and you've taught me so much about the discipline and the work ethic behind being self-employed, what would you say the best part is and the most challenging aspect of self-employment is?
So we've probably touched on this slightly, but it's an individual question. So the best part is, of course, having freedom, having that ability to be rewarded for hard work. Being your own boss is nice. That is nice because if you're responsible and you have integrity, you can succeed at being your own boss. The biggest challenge is planning, whether it's financial planning, whether it's tax planning, whether it's healthcare planning. That is a big challenge, and we've touched on that, and we have to understand that it is not a fly-by-night type of thing where, oh, okay, I have an extra $5,000. I'm going to put that into an IRA. That's not the way to do it. You have to be disciplined, and you have to plan properly, and you have to execute those plans. And so the plus of being your own boss can be that challenge as well.
Yeah, I think it's really just having some accountability partners in there because then you can enjoy yourself and have that freedom because everything else is working in the background for you.
Right.
Well, I think those were a lot of great points, and I'm sure all of our self-employed listeners or those that are thinking about starting their own business will find some great tips in this episode. And obviously, we can dive into it more on an individual basis as well. We'd be happy to answer anyone's questions. If you do have a specific question or you're self-employed, maybe want to start one of those retirement plans for yourself or company, feel free to head to our website, union-financial.com. You can click the Book a Meeting button, and it'll take you right to our personal calendars, where you can schedule a phone call, Zoom call, or in-person meeting, always complimentary, with either myself or Lisa. And for everyone else listening, thank you so much for tuning in to another episode of the Future of Finance podcast. I'm your host, Marissa Wood with Union Financial. This is Lisa Green, also with Union Financial.
Thanks for having me again.
We look forward to helping you all live a better financial future. Investment advisory services offered through Brookstone Capital Management, LLC, a registered investment advisor. BCM and Union Financial Services are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. The opinions expressed by Marissa Wood and guests on this show are their own and do not reflect the opinions of this radio station. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risk and otherwise stated are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor to determine if it's suitable for your specific situation. This program is designed to provide accurate and authoritative information information with regard to subject covered. Index or fixed index annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charge as described in the annuity contract. Guarantees are backed by the financial strength and claims paying ability of the insurer. Please refer to our firm brochure, the ADV 2A Item 4, for additional information. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone.